Hi all, welcome to Free Float and Happy Diwali. I'm Shah and I have Kiran with me.
Hi Sam, happy Diwali to you too.
So today we're going to have a very quick session on the 60-40 portfolio. The 60 in this refers to the equity allocation and the 40 refers to the bond allocation. The idea was first proposed by Jack Bogle, I think. He was a big fan of keeping things simple, the father of indexing and so on and so forth. So, what he said was, the best way to have a construct a simple, decent portfolio that you can stick to year in and year out for the next 30, 40 years is to just buy 60% of an index fund and 40% in a bond fund and rebalance every year and you'll be all set. That setup has worked beautifully in the US. And the question is, should Indian investors looking at investing in Indian securities, should they follow the same 60-40 allocation? So what do you think, Kishan? Should Indians blindly follow Americans into this allocation?
No, I think no one, not just not just Indians or Americans or the Chinese or whether it's a housewife or a someone in his 20s or someone in his 40s or 50s should not follow blindly 60-40. I don't believe that at all. I think everyone is unique, in their financial circumstances and stuff.
Right. I kind of agree that the portfolio should be sort of customized to people's risk appetite, and the 60-40 could be a crude weapon. But I'm more interested in the underlying assumptions, right? Because you talk to any advisor, they will show you how the US 60-40 worked over the last, I don't know, 30, 40 years and say, look, it's awesome. It's the best thing since sliced bread. It keeps costs low. It's dumb enough for anybody to follow, right? You don't need a college degree to figure this out. My interest in this was primarily what drove its success, so that if you can sort of look into why it was successful, then you can begin to answer whether the country specific question is India on the same trajectory that the US was 30 years ago, so that the 60-40 will perform. So what are your thoughts on that?
Well, I think, honestly, so if you look at it, it's all historic, right? So you have had 30 years of a bull run in bonds, and you have had 30 years of a bull run in equities, which has been all, so both sides have worked out in this time frame. Now, we only say that US is unique, in this. And US has been unique for the last 250, 300 years. But is US going to continue to be unique, going forward? Who knows? And obviously, if you had a portfolio in Argentina, 60-40 in Argentina, your equity portfolio would have at least, reflected the inflation, while your bond portfolio would have got wiped out. So, I think we talk about historical bias and, selection bias and, or availability bias. There is a very strong, and we do this, and we mention this all the time that, bonds, yields have gone in the US from 9.5%, 10% to 0% in the last, so bonds have done well. Corporate bonds, have done really well. So I would not say that, you should, just to take that as a short period of time in history, I would think that's incorrect. Now you have negative interest rates. So would someone's advice be to have a negative yielding, bond portfolio versus, say, buying, say, some stock for a dividend yield which is 2%, or 3%. that would be much more beneficial, no?
Right, right. Yeah, I mean, I don't get advisors who go solely by one historical data set, because like you pointed out, Argentina is obviously a basket case. You can say, oh, it's a Latin American country. It was anybody, any blind fool would have figured out
But
not to do that. But
but most emerging markets are, are not that similar to Latin America. I mean, most Latin American countries have a per capita income of 10 to 15,000, dollars per this thing. Most of Southeast Asia is around that, those levels. So is China, actually, even at that level. And the point is that, Argentina is not, most of Latin America has not grown in the last 50 years, maybe apart from Brazil and Chile and stuff. But Southeast Asia is, doing fine, I think, in the sense right now. But would you say that, if you're in Southeast Asia, you should have a 60-40 bond portfolio when, you don't know what will happen, say, 10, 15 years from now? So I don't agree with that thing that, America, Argentina is a basket case for sure, but the whole of emerging markets are, it's all basket cases in some way or the others. So, what can you say to that?
Yeah, that's true as well, because obviously, if you open the kimono and peek inside, what you will find is fairly shocking in some of these emerging markets, Southeast Asian emerging markets as well. It's not a very pretty picture. There's a lot of like recently, you must have read about how the Chinese premier personally pulled the plug on the Ant IPO, right? So it's not enough that you become successful on your own, but you should also have the right political connections and so on and so forth in order to kind of hold on to it. So who knows, a year from now, the whole of Ant could be dismantled by the Chinese state. You never know, right? So you have all that political risk as well in emerging markets. So this is, I think, something that we have written up in the post as well, saying the rule of law, enforcing contracts, intellectual property, all those things come into the picture. When you're looking at whether India is going to follow the same trajectory as the US, all these things also need to follow the same trajectory. So unless that happens, I don't think it is a good idea to just blindly go into a 60-40 scheme without having a sort of sound sense of what is the underlying assumption that you're making, right? When you buy this portfolio.
Yeah, I know.
So,
I absolutely agree. So I think in India, maybe if you're an institution and you have and you just want to have 640 portfolio because it's easier for you to rebalance and stuff, and you're just looking for preserving what you income the capital, and then just have an incremental growth. It might work for it, but I would not advise it for most people just to blindly do it. I mean, it might make sense for a few, but to blindly do it, not at all.
All right, guys. So that's it from us, and happy Diwali once again, and we'll see you again next weekend. Bye, Kishan. Bye, guys.